Business news now, and it's been a record-breaking year for big oil, and Britain's BP is no exception. The energy giant profited to the tune of $8.2 billion in the third quarter, more than double the net income of the same period last year. The surge in oil prices after Russia's invasion of Ukraine has turned energy companies into what one boss called a cash machine, but the oversized profits have fueled calls for energy companies to pay higher taxes as higher energy prices contribute to a cost of living crisis across the globe. Well, let's return to London, where Arise correspondent Laurie Laird is still standing by with more on that particular story and the rest of the day's business headlines. Thank you for staying with us. Laurie, some strong results, Shell, BP, and the other oil majors.
Your oil company, Charles, they have all had staggeringly good third quarters after record high second quarters. Let's look at BP, which reported today they made $8.2 billion in the third quarter, and that's slightly less than the 8.5 they made in the second quarter. But still, a lot of analysts thought that BP that total may come down a little bit, simply because crude oil prices have come down quite a bit between the third quarter and the second quarter. And the reason for this isn't too difficult to figure out. Oil companies tend to make their investment, which is the most expensive bit of getting oil out of the ground. There's exploring for the oil, sinking oil rigs into the seabed, extracting oil out. Those are fixed costs. It is very expensive, but once those costs are sunk, they don't need to be there's some sort of maintenance of equipment. But once those costs are sunk, all of the receipts that come from bringing that oil out and selling it tend to be fairly high profit. So the capital investment that comes is many years in the past. That means that when this oil is coming out of the ground right now and being traded at very high profits, that means that the oil companies are all profiting to quite a large amount. Their fixed costs are staying the same, but their selling costs are much higher. So that's why all of these oil companies are doing incredibly well.
Well, it certainly sounds like it, but of course there could be other costs, Laurie, because those profits have fueled more calls for a stronger windfall tax.
Absolutely, and this is really an interesting thing to try and unpack, Charles. UK oil companies that are investing and extracting in the UK are now subject to a windfall tax of 25% for the next year or so. Jeremy Hunt, the new chancellor, has let it be known that he's thinking of extending that to 30% and also extending it to 2028. Now, this is going to be extremely popular. People are facing the biggest cost of living crisis in a generation, in part because of higher energy prices, because of higher gas prices, because of higher prices to fill their tanks with petrol. So this is a popular way to raise money. And it also feels like oil company bosses have accepted that they are going to have to do something. Ben Van Beurden, who is the outgoing head of Shell, earlier this month, we're now into November, early last month, talked to a room full of oil executives, and he said, look, that we are going to have to share the pain. Many of the people in this room are going to have to pay more. And in fact, Bernard Looney, who is the head of BP, has called BP a cash machine. So there's an acknowledgement amongst these oil industry leaders that they are going to have to pay more.
Yes, but I mean, as you said, windfall taxes, I would imagine, quite popular with the public. If I had energy costs, I'd like to be helped with those costs. But those windfall taxes are not universally admired, are they?
Again, they have some popular appeal and they have some logic in a situation like where we are in the UK. The cost of living standards are falling by their fastest rate in over 50 years. But there are a couple of things that make a windfall tax quite a blunt instrument. First of all, when we look just at the UK, where windfall tax is being debated quite heavily at the moment, the windfall tax that the UK can impose on oil companies operating here applies just to what they are doing here. So Shell Shell, one of the biggest oil companies in the world, made $9 billion in profit in the third quarter, is actually operating at a loss on its UK operations. They say that they're going to pay no windfall tax for the rest of the year. BP says it's probably going to pay about 700 million in windfall tax. When we're talking about a black hole, a fiscal black hole in the UK of 40 billion, these things are just a drop in the bucket. The other sort of imperfection with windfall taxes is that they work now when oil companies are making very, very high profits, when the cost of what they are peddling has become very, very high. But it isn't always like that. Toward the in the middle of the pandemic, in the spring of 2020, oil prices went briefly negative. BP lost 7 billion in the couple of quarters in 2020. So it's difficult to incentivize oil companies when, as I mentioned earlier, their fixed costs are very heavy. Their variable costs, i.e. the price of oil, you cannot predict that. So if the tax regime is not particularly certain, there's a real disincentive for oil companies to invest if they don't know what the tax regime is going to look like.
And just one more thing before we move away from windfall taxes, Laurie. I understand there are calls for those windfall taxes to be imposed on renewable energy generators.
And this is such an interesting thing to discuss, Charles. And we just saw some of the wind farms in the UK. There have been calls for these renewable energy projects, which are thought to be such a societal good. There is a call for them to face windfall taxes as well. And the reason for this is that they are generating, once the investment in renewable generation is there, they are generating energy at zero marginal cost. Yet what they are earning is calibrated by the cost of gas. So they are becoming very, very profitable. But again, you get into this conundrum of these are very expensive projects, these renewable energy projects. And if you begin putting a windfall tax on them, do you disincentivize people from investing in renewable energy, which is settled argument? We want more renewable energy, but if they are facing higher taxes, it's much more difficult to bring investors in to do that.
Absolutely, very good point. Before we go, let's look at Uber. Some pretty strong results. Does that suggest that Uber's future is assured now?
Well, listening to the Uber CEO on the earnings call this morning, he is saying absolutely no problem with customer demand. This is the best quarter that we have had. Do keep in mind that Uber did lose $1.2 billion in the third quarter, but that's half of what they lost a year ago. But they say business is absolutely booming. One thing to watch out for, though, with Uber is these court cases that are happening all over the world as to how they classify their drivers. Are their drivers completely freelance, in which case Uber does not have to pay them for sick pay, they don't have to pay pensions, any kind of benefits? Or are they some employees, which makes them much more expensive, and it really messes with Uber's business model? That is still to be determined in so many jurisdictions.
Laurie, thanks very much indeed. Laurie Laird, Arise business correspondent, talking to me there from